For more on the global economy, let's bring in Bryson, chief economist at Wells Fargo. Is it your fault that we look at that Atlanta Fed so seriously? What's the Bryson GDP number?
Yeah, so the Bryson GDP number is going to be probably in the 1% that we know right now. I mean, the thing with Atlanta Fed was, as Steve just pointed out, what they were really reacting to was that big advanced trade number that we got last week. That subtracts from GDP. To the best of my knowledge, they haven't figured out what's happened to inventories. I mean, in my sense, a lot of that's probably going into inventories, so that'll offset, that'll help push up the GDP. At this point, I'd be very surprised you get a negative number in the first quarter. I mean, and if you do, you would look at consumer spending, you look at investment spending, you'd say, okay, this negative number is probably just like a one-off quirky sort of thing. It doesn't mean we're in recession.
I don't envy what you try to do, Jay. Can AI help you figure out what expected effects of tariffs, what the expected effects of DOGE? Can watching it cause people to change their behavior before anything actually happens? How can you come to any conclusions on your forecasts with all this swirling around? It seems almost impossible.
Well, so any forecast at the end of the day tends to have a wide confidence interval around it. And right now, that confidence interval is just even wider. And so, I mean, what we've tried to do here, Joe, is, we've tried to say, okay, we see these different announcements that are kind of coming and kind of going, et cetera, et cetera. What's the probability that some of this stuff goes into effect? And so, if we have a 25% tariff on Canada, if we have a 25% tariff on Mexico, is that whole thing going to go into effect? And what's the timing? And so then we try to figure out some sort of probabilities. But it's a real art right now in trying to figure out those probabilities and what effect it does have on your forecast, because let's face it, it's changing in real time right now.
The jobs number tomorrow, it seems like it's too early for any of these things that have had a real world impact. But is the prospect of these things, will it cause the number to be weak? Or are there other reasons why the number would be weak tomorrow? What do you expect tomorrow?
So we're at 170,000, and so that's roughly in line with consensus right now. I think it's still too early to see a big effect in terms of at least the DOGE sort of thing and federal employment. I mean, we're thinking that's going to subtract maybe 5,000, maybe 10,000 from federal payrolls. But, keep in mind, the survey week here was the week of, I think it's February the 9th through the 16th. And so it was probably a little bit early for a lot of that stuff to really start to show up. It will have a bigger effect in the coming months. We're thinking in the order of tens of thousands, but probably not hundreds of thousands, at least not what we're knowing right now. And, as Steve was saying earlier, the thing to really kind of keep an eye on as well is what's happening in terms of private contractors around the country. Are they being affected right now in terms of some of these DOGE sorts of effects?
We had surprisingly strong GDPs all through last year. Is there anything that's happened so far that makes you think that it's going to be weaker, or that we've hurt it, or that somehow we've undercut that economy? Or will it surprise people because it just keeps percolating along because it's the greatest economy in the world?
Yeah, so, in terms of what our expectations are, and this goes back to our conversation just a few minutes ago in terms of the tariffs, we are looking for a slowdown later this year as the tariffs, as some of those tariffs start to hit. We're not looking for a recession, but we are looking for a slowdown. And then as you move into 2026, because you have a lighter regulatory touch, that should probably be pretty good for capital investment spending. That kind of picks up. We also have a placeholder in there for an additional tax cut towards the end of the year, which should help consumer spending. And so when I think about the contours of our forecast, 25 is more about the negative effects from tariffs. 26, I think, is more about the positive effects in terms of maybe a lighter deregulatory sort of touch, as well as any potential tax breaks that you get starting next year.